Denise inherited her farm for $1 million from her late husband. A handful of years ago, it was valued at $2 million. Last month, two of her neighbors sold their farms for $4 million. That's great news for Denise. Unfortunately, not so much for her son if he inherits the farm. He is going to have a massive tax bill. Today, I want to share Denise's story. I've talked to her about her in the last couple of segments, so go back and check them out. But she is someone that I knew, and we talked about insurance. She had a $50,000 policy. It was enough to cover the probate fees if the land's transferred to her husband because he's not on the title. But if it goes to her son instead, she is not covered. Not anywhere near the amount that she needs. And the reason why is because the government is going to tax the capital gain tax. And she had no idea anything about that at the time because when she got it from her late husband, she got it free and clear. She didn't have to pay any fees or anything like that because his insurance had covered it, as well as the program that allowed for an exemption of the capital gains. So we had a conversation and I taught it to her. What is capital gains, you ask? It's when the government assumes the day that you pass, you sell everything. Not just when you pass, but if you sell something, right? Like you can be alive, sell your cottage, have to pay capital gains. You do not have to pay capital gains on your primary home. That is completely free and clear for you to go. But there is a certain percentage. The government will take between 50 to 65% of the amount of value that you gained from cottages, rentals, crypto, stocks, your RSPs, anything that you get value from, the government's going to take their portion. And when you pass, the government assumes that you have sold everything, you liquidated all your money, assets, and stocks. And they act as if all of that is on your personal income. How does that impact you? Well, here is a chart for the Ontario personal income because we're talking about Denise earlier. Let's just say, for example, somebody makes $90,000 a year. The taxes are tiered, so you don't straight up pay 38% off of that full $90,000, but it's broken up into brackets. Your employer will take out a percentage every single paycheck to cover for that insurance. Now, if you sell something, or in this case, if you pass away and all your assets gets liquidated, it's going to add it to your personal income. So if you had that 90,000, let's say you made 100,000, then it's going to think the government's going to say you made 190,000 instead of just 90,000. Well, all of a sudden your tax bracket goes up to that one for 48%, which means they're going to add even more money to what that you owe for that. And whoever, like, if you pass away, whoever inherits those products or your assets, they're gonna have to pay that money, that taxes, if you don't have a life insurance policy put in place to cover it. Same thing as if you were to, sell something while you're alive. It's gonna be part of your personal income. So that's a little bit on the side. Your best bet would be to find out, and this is the actions you should be taking right now. Grab a piece of paper, something you can remember to keep, but write down the date, the cost, and what the asset is that you have to know what the value is, to know what it changes to in the future. We did this for her farm, for Denise's farm. And the capital gain tax, even though the government's only going to take 50%, if she makes an additional $3 million off of that farm, the government's going to take between 50 to 65%. So that's going to tax her between $650,000 to $750,000. Her son doesn't have that. She doesn't have that at the moment. But her life insurance policy will have that and will allow for those fees to be paid to the government so her son can get the farm and have it to be able to do what he likes with that. If you want to learn more about finances, subscribe and check out my videos every Tuesday. If you have any questions, drop them in the comments. I'll do a video on it to explain how it works for you, because I want to make sure you're protected and covered. That is very important to me, because you and your inheritance and your family staying safe is number one. I'll be happy to do a financial checkup with you. If you are curious what exactly you may potentially have to pay, or what would be left for your children to pay. Remember to subscribe and have an incredible Tuesday.